13 years ago, I know nothing. I started with absolute zero and I tested my way through 300 different strategies. How is it possible setting a tighter stop loss, taking losses, just with a few percent of loss will lead to more losses overall? So by panicking, you can actually make any strategy unprofitable if you set your stop loss too tight. So welcome back to my channel, and in this video we're going to talk about the unpopular opinion, how to lose money with any strategy. It's quite interesting that I'm going to make a video like this because who the hell wants to watch a video on how to lose money when you can try to learn how to make money, right? When you think about Warren Buffett, one of his rules is really not lose money, and rule number 2 is follow rule number 1. And there is an ounce of truth in that quote, because if you learn how to lose money, then you also learn how not to lose money. And that's what this video is about. And it's about a very important concept that I'll reveal later in this video. Once you master that, then you'll have a much better control over your investing strategy instead of losing money. Because if I kind of do this one thing, then I can actually lose money with any strategy, regardless of how successful the indicators are or how accurate it is or whatnot. So here's a quote from myself. If you figure out all the ways to lose money, then you won't lose money anymore. And it's a quote from Seto. The reason why I wanted to give you this quote is because that really summarizes my investing journey. When I was investing 13 years ago, I know nothing. I started with absolute zero and I tested my way through 300 different strategies. I placed over 10,000 trades, so on and so forth. I tried different markets, different currencies. Basically, I tested out all the different combinations of indicators to figure out how to lose money. It was an extremely painful process, but nevertheless, I've got through it and I figured out how to lose money. So I can tell you how to lose money very easily. And if you follow those steps, you will learn how to lose money as well. So if you do the opposite of that, then you'll make money. Let's talk about a couple of situations. You can tell me what you think in terms of which situation will lose the most money. So situation 1, imagine you're a long-term investor and you set a stop loss of 10% and a gain of 20%. And what this means is that if the market goes down by 10%, you sell no matter what. And if the market goes up by 20%, you sell no matter what. So here you can see that the risk and reward is defined. The second situation is imagine you're a long-term investor again, and every time you see your position having a few percent loss, which is less than 10%, you take it. And situation number 3, imagine you're a long-term investor and you don't set a stop loss. Instead, you hold for a year. So you don't care about what it does during the year. It might go 50% up or 50% down. You hold for a year. What do you think is the probability of each of them? Which one do you think will lose the most money? And the answer is number 2. So you might be wondering, how is it possible setting a tighter stop loss, taking losses, just with a few percent of loss will lead to more losses overall? And I've actually done this many times in the simulator, tested it in real life as well. I don't have the data with me anymore because that was many years ago. This is because of one word: panic. When you're investing and you have a strategy, and if you panic, you will try to take losses more rapidly. And when you observe that pattern, what you need is to tell yourself to stop. You need to make sure you don't panic, because every time you see a loss, you take it, you will be taking a lot more losses than if you just hold on to the stock for, let's say, a period of time, let's say 1 year. 50% of the time the market goes up, and 50% of the time the market goes down. So it's important to take care of your emotions when it comes to investing long term. So by panicking, you can actually make any strategy unprofitable if you set your stop loss too tight. And let me illustrate to you with a couple of examples. So the first one is your target profit is 10% profits and 10% loss. Now this sounds quite straightforward, and I'm not going to consider transaction costs here, which is going to be important as well. But your probability of win and loss in example 1 is 50%, so half-half. So this is quite straightforward. Example 2, your profit is 20%. And your loss is 10%. Then if you are investing in a completely random market, then your probability of winning is 66% win and 33% loss. So that means in order for you to have a winning strategy that actually makes money, you need to win more than 66% of the time. If you win 60% of the time, but making 20% profit is not good enough, because over the long run, you'll still lose money. Example number 3, 90% profit and 10% loss. Now, this seems like a great idea because you're like, I'm going to win big. Every time I make money, I'm going to make 90% and I'm only going to lose 10%. This might seem good on paper until you calculate the probability and you realize that 90% of the time it will hit your loss position and 10% of the time you'll win. So that means you might losing, and then you win. And sometimes when you're looking at probability, you might be losing 18 times in a row and then you win 2 times. So this becomes very difficult emotionally to hold on to all these losers when you think that only 2 of them will make you 90% return. When you're looking at the win rates, you also need to consider your risk to reward ratio. Now, example 4. You target 10% profits and 90% loss. When you want to take small profits on a continuous basis, and then afterwards 1 to 2 significant investments wipes you out. So you might be winning 90% of the time, but 10% of the time you have losses, that will actually wipe out all your profits. And here you'll find that it is quite hard on your emotional states as well. You are in a euphoria state when you're making small gains, and bam, you lose all your profits for the last 3, 6, 9 months. So when you think about that, this sucks. And I have actually tried every single example I've shown you here, whether it's through real life trading or coding and the strategy with different parameters, and it actually affects your emotional states greatly depending on how you set your parameters. And for the 5th example, I'm going to do something more extreme. I'm going to target 9% profits with 1% loss. And here you can see that it is actually same as the previous example, number 3. And in this case, again, 90% of the time I'll be losing money. So that's actually quite difficult. And this is usually the result of a behavior that I'm taking rapid losses because I'm panicking and I'm not allowing my account to incur any unrealized losses. And when you do that, you actually take so many rapid losses that you will make your strategy unprofitable. When you're testing your strategy, you're coding it or whatnot, you need to test all these parameters and figure out what works best for your strategy. Sometimes a strategy might work with a 1-to-1 risk to reward ratio will completely fail if you change the risk to reward ratio to 2-to-1, to 3-to-1, to 4-to-1, and so on. So that's why you need to test all of it, make sure what works, and which is why it is so time consuming. And example number 6 is really the extreme, where you aim for 100% profit and you have a 1% loss. And sometimes you will see some crazy people do that. That means they will be taking losses every single day for 99 days. Hopefully, the 100th day, it will be profitable for them. And it's really hard on you emotionally. And when you think about the market volatility, it is very volatile, so it's extremely easy to lose 1%. So if you ever observe yourself having this kind of behavior and you panic or whatnot, then you need to stop. You need to step away from the trading station. You need to take a look at what you're doing. You need to look at your risk to reward and how come you're so uncomfortable having some losses in the short term, and revise your strategy and your mindset so then you can go forward again. So when it comes to investing, my goal is really to make 30% return a year. This is kind of important because 30% is a long-term goal. So I'm not trying to panic sell. I'm not trying to panic buy. It is a long-term investment, and you can learn more about it if you go get the 4-hour free training on my website, which is 5minuteinvesting.com/3kstudy. In that part, I'll talk about long-term versus short-term investing. I'll also talk about emotional states and how to look at the market highs and lows. So if you want to think about that, learn how I invest, then go attend the free training. I mean, it's free. So when it comes to Investing Accelerator, my goal is really to help another 20 professionals without a financial background to master investing and target 30% a year. So in terms of successful case study within Investing Accelerator, Mike, where he made 44% from Ulta Beauty, 37% from tech, and also 67% from American Express. So congratulations, Mike. For Annie, she made 92% from ADP, and you can actually read her response here. And we also have Peter, where he made 43% from CAE and 53.8% from Boeing. So all of these investments are actually less than 12 months. So congratulations. I know you are all doing a good job. So I'll see you in the next video.